The discussion of natural catastrophes, we're always thinking that it's going to get worse over time. We see this little line and it's pointing in a bad direction. I think it's a little bit up and down. What's happened is that in the last 5 years, we've had inflation, a pandemic. Both of these things in their own way have made the insurance problem more observable to the average person.
Welcome to the Tippie Leads podcast. Stories from the University of Iowa's Tippie College of Business that will change the way you work and lead. Produced by the Tippie Leadership Collaborative. I'm your host, Nick Westergaard. I teach at Tippie and lead our Story Lab program. This podcast provides another opportunity to share stories from Tippie with our community and beyond. Each season of Tippie Leads, we focus on a grand challenge in today's changing world of work. This season, we're looking at risk. One of the biggest risks we face are natural disasters. They can occur anywhere, often without warning. And we've had plenty of them lately, from the LA wildfires to the derecho that ravaged eastern Iowa in 2020. These events bring risk to everyone, from victims to rescuers to insurance companies. As we'll see, this can cause a ripple effect of far-reaching consequences industry-wide. To kick off our new season, we'll hear from Tippie Professor Martin Grace, who serves as chair and faculty director for the Vaughan Institute for Risk Management and Insurance. Martin studies the impact of catastrophic events on insurance companies and new ways of insuring for catastrophes. Later in the show, we'll hear a story from Tippie undergrad Aiden Truesdell on how his life was impacted by a natural disaster recently. And finally, we'll bring it all together with a final Tip-E just for you. Ready? Let's get started. Martin Grace is the Clement T. and Sylvia H. Hansen Family Chair and Professor of Finance at Tippie, where he also serves as faculty director of the Vaughan Institute of Risk Management and Insurance. A nationally recognized expert in insurance economics, regulation, and catastrophe financing, he has shaped research and policy on risk management throughout his career. He is consultant for the National Association of Insurance Commissioners, the World Bank, and industry groups. A former president of the American Risk and Insurance Association, Grace has published extensively and testified before Congress on the future of insurance regulation. Martin Grace, I am excited to chat with you. And when we were going to talk, I thought about when you first became part of our team at Tippie, and among the many great things, I wanted to highlight what Terry Vaughan, former director of the Vaughan Institute, said at that time. She said that you're one of those exceptional academics who does research highly relevant to the industry and policymakers. So that is certainly a big mantle to live up to, but certainly as you follow the news, you look at what's going on, and your work is right there reflected in all of that. So as we think about that, I wanted to set the stage a bit also, and wondered if, I'm sure anecdotally folks might think that, boy, it seems like there's been a lot of natural disasters and those being on the rise, but probably not thinking of the ripple effects that has on the insurance industry, which is the largest non-ag industry in the state of Iowa. So set the stage for us both on the number of disasters or the level of disasters and what that means for the insurance industry.
So thank you, Nick, for inviting me here today to talk about this stuff. I find all this very fascinating, and Terry was right. I like talking about insurance and public policy, and it's because a lot of how the world looks at insurance is like what happened yesterday, and what happened yesterday is going to affect me today. And that's a little bit true, but it's not always true. For example, we had storms in Iowa in the last 5 years. People think the world is going to end. We're going to have storms like this every year from now on. Those are rare events. We just happen to have two somewhat close together. So statistically, it's not that abnormal. But the way we frame things as humans, it seems like everything's going to heck in a handbasket. And if you look at all the discussion of of natural catastrophes. We're always thinking that it's going to get worse over time. We see this little line and it's pointing in a bad direction, and we think that it's that way all the time. And I don't think it's that clear. I think it's a little bit up and down. It goes up and down. But what's happened is that in the last 5 years, we've had inflation, we've had a pandemic. That both of these things, in their own way, they're related a little bit. In their own way, have made the insurance problem more observable to the average person. So, we had inflation that was somewhat caused by, the pandemic itself with the supply chain disruptions, and then sort of the federal government's macro economic response, which was low interest rates and money for people so that if they couldn't work, they wouldn't starve. So this extravagant, extravagant is probably too strong a word, but this heartfelt desire to help people, put lots of money into the economy. At the same time, people started to move around. They didn't have to work in any particular place. And so housing prices, because of this new churn, housing prices on average across the country went up about 40%. So you think about all this stuff that's going on, inflation, housing prices going up all by themselves, essentially, and insurance prices have to respond to that. In addition, we have this overhanging natural catastrophe thing. So almost every day we hear about, the fires in LA over the beginning of the year, and now South Carolina is on fire, and we're thinking, it's the world is coming to an end, and it's just not that bad. But we do have these cycles or peaks and things seem to happen, the way we look at the world, things seem to happen all at once. I want to say that things aren't so bad, and we shouldn't, make public policy based upon the bad days. We should make public policy based upon the typical day. And so that's kind of like, if I was going to give advice to anyone, that's what I would be thinking about. Now, if you lost your insurance, for example, because your insurance company left the state or went bankrupt, well, that's hard on you. So that person or that group of people are bearing some additional costs. But for the most part, things just aren't as bad as we think they are. So I am a optimist. So next year I think inflation will be a little bit lower, and we will not see the same kind of price increases in insurance. Now, it's funny, this happened not just in homeowners insurance, but in auto insurance too. So you can't say it's natural disasters when it happens in other types of insurance. So that's kind of like, in a nutshell, how I'm thinking about the world right now.
Interesting. Yeah, especially the point on the automotive side of things also. I will readily admit that I have a fairly simple understanding of insurance. But, it being based on the kind of distribution of risk across many. And when we talk about events that feel like they're happening more, or at least where they're more readily available, and we read about them, does it change kind of the inner workings, the fundamentals of the insurance industry with that assumption of distributed risk?
So the whole idea behind insurance is to share it across all parts of the economy. And an insurance company, it takes the premium from you, and it holds a little bit in reserve and invests the rest into the broad stock market or into other kinds of businesses, like it might, invest in real estate or things like that. It's trying to diversify itself. It'll diversify by being in other lines of business. So companies, for the most part, are like in home and auto, in most large American, personal lines companies try to protect, the homeowner. That's kind of their customer. And then there's commercial companies that work on commercial auto and trucking coverage and workers' compensation and building insurance and product liability insurance, and they try to diversify. There's very few companies that only sell one risk in one county. That would be the opposite of diversification. There's very few companies that do that. But to the extent that they can do that, they still only want to put like risks in a pool with like risks. So if you and I have a $200,000 house, it's built the same year, the same kind of roof, we're likely to get put in the same kind of pool. If $1 million house is not likely to get put into that pool, they'll pick a different pool for that. So they diversify not only based upon the types of products, but the types of customers they have too. So they try to do that. The problem is that kind of customer diversification can get wiped out in a fire, or it can get wiped out in a hurricane or a derecho, because even though you put these people in different pools and you charge them a little bit different, a fire comes by, burns your house down, and it might burn your neighbor's house down. It sort of wrecks that. So it's called catastrophe risk, is one of the things that is worrying insurance companies. Now, what they're doing with that, sophisticated ones, is that they're trying to get reinsurers, that are built all around the world, to basically be the insurance for the insurer. And this is so cool what they do. They say, show me all the houses that you have in, let's say, Florida or Iowa. I want to know their latitude and longitudes. I want to look on a satellite map and figure out where they are. I want to look at kind of roofs they have. I want to see where the rivers are. I want to see where the forests are. They can sort of map this out, and they have relatively advanced data analytics now to classify, this is a low risk, this is a medium risk, this is a high risk. And they'll say, we'll take 20% of your risk, or we'll take that 20% or that 20%. So they'll pick and choose what they want to reinsure. And then the insurance company has to find coverage for the other part. But this has become a relatively sophisticated business with data analytics. So that's actually a good thing, because people who are low risk get a lower rate as a result of that. But if you're a high risk person, you get a higher rate. And people say, how do we get our rates lower? How do we get back to the way it was 5 years ago? Well, that's probably never going to happen. And that's because prices have gone up. I mean, if your house price went back to the way it was in 2019, you wouldn't be very happy. This is the new reality. So insurance companies are going to be charging more because they're having to cover more. And if you think about it that way, it makes sense. It hurts your budget, especially if your wages didn't go up 40% in the last 5 years. That is a real concern. So in that regard, lots of people are saying, well, how can we make our houses more resilient? And if you think about it, it'll cost money. There's no free lunch. You might, like in Iowa, you might rebuild not just putting new shingles on, but rebuild your roof so that it can withstand winds better. Nothing can withstand a tornado, but short of a tornado, but a massive hailstorm, we want our roofs to survive that. You can rebuild a roof to do that. It's not cheap. But if you do that, it's quite possible the insurance company will recognize that investment and lower your premiums. But that's a trade-off, right? So how long are you going to own the house? What's the value of the premium going to be, the premium reduction going to be? There's just lots of little things like that. And the average person has a hard time figuring this cost-benefit out.
I think it's really interesting, too, the kind of balance on mitigation, it taking longer, there being an obvious cost associated there. From the company perspective, you talk a lot about kind of the idea of risk avoidance versus risk reduction. And I wondered if you could say more kind of in contrasting those two ideas.
Okay. So risk avoidance would be the insurance company. This is like what happened in Los Angeles. So State Farm said, oh my gosh, we have too many houses. We have too much concentration of risk. So we're going to non-renew those customers. We're going to avoid that risk now. So that's just saying we're just not going to cover that risk anymore. And some companies do that wholesale. They'll say, the state environment, whatever it is, we're just going to leave the state. We're avoiding that risk. So it's a massive change. Now, risk mitigation comes in a couple of different flavors. If you think about the way insurers price, it's like we sort of look at the expected loss. So what's the probability of, let's say, a fire times the typical damage for a fire? So that's, price or probability times loss. Can we do things that either, like engineering solutions, that will reduce the probability of having a fire? So one of those things might be to if you're in California, you might hardscape around your house so that there's no grass, there's no vegetation that would dry out and catch fire and burn your house. That would be like one thing. Or you could have, water tanks underground that you could moisten the ground with when there's a fire in the area. Now, I actually not an engineer, so I don't know. I'm just making that up, but I'm just thinking make the ground wet. It's not going to be so bad. And then so you can reduce the probability of a fire, or you can build your house so that it is fireproof. And I don't know if that's a thing, but you could do things that make it more resilient against fire. Now, I don't know that there's really good examples of that. I think there may be. You could probably get an engineer that would talk about that. But I know that the insurance industry has partnered with an engineering consulting group. And what they've tried to do is figure out how to make houses more resilient to wind. And they even got like a jet engine and build houses and use the jet engine to blow them down. It's like the big bad wolf, but they get they get a Pratt and Whitney engine to knock down a house. And they've developed something called the Fortified Home Standard that had a really nice recent test. But the standard was made, and they convinced a bunch of people in coastal Alabama on an island, a coastal island, to rebuild their house to this standard. And the reason they had to rebuild is because it got blown down in a hurricane. So they rebuilt to a standard. Another hurricane comes along. The houses that were rebuilt to the standard, I think all of them survived. And only about 40% of the other houses survived. And so they were saying this actually works. And we had not just a jet engine here. We had Mother Nature tested out for us. So this, I think, almost anywhere in the country that has wind storms, that this standard would be useful. Now, what's nice about it, it's not a building code like, you have to raise your house, 30 feet off the ground. It's a style of building the house. So they're very different things. It doesn't add much to the cost of a house, while a new building code could be 20, 30%, depending upon what's entailed. So I think this is a nice intermediate thing. But the problem is how many times in your lifetime do you remodel your house? It doesn't happen. It's not something that 7 years, I've been here 7 years, it just doesn't happen. So I think that this, for the long run in the United States, we're going to be building stronger and better houses, but it's going to take a generation for that to happen. And until that happens, the choice is, my insurance premium's going up, or should I remodel, or should I modify my house? So that's going to be the choice everybody's going to have that lives in high-risk areas. 40% of Americans now live in what I would call a high-risk area. And so if you think of the coast of Florida, the coast of Texas, coast of Alabama, those are very desirable places to live. Puerto Rico, the U.S. Virgin Islands, they're very desirable places to live, and they have massive hurricane exposure. And, people call it the price of paradise. It's riskier, and we don't think of Iowa as paradise. I actually really like Iowa. I don't know if it's paradise, but I think Iowa is very nice. But I don't have any palm trees in my yard here. One can have them in Florida. So the story here is that we are stuck in this middle of a transition to needing more fortified houses, and you can either pay up front and higher insurance premiums in the short run, or in the long run you pay to modify your house. That's kind of a nice way of thinking about it. Well, it may be annoying to people, but it's the economic way of thinking about it.
As Martin shared, disasters can have a ripple effect across the lives of those affected. During the Okoboji floods of 2024, Tippie undergrad Aiden Truesdell found himself and his summer job impacted. He shared the following story at our Fall 2024 Story Lab end of semester showcase.
I was about to go to sleep when I heard a knock on the door. We had to evacuate the campers. Later that week, my coworkers and I found ourselves sitting in our boss's office being told we were going to be let go for the summer. See, this past summer, I worked for a camp up in Lake Okoboji. But due to heavy rains and unexpected flooding, we had to shut down, and as a result, everybody was let go. As a business major, I was looking for one last fun resume builder to have before I entered the corporate scene of internships, office spaces, and just general busyness. But 3 weeks into the summer, and I had lost that. I didn't really know what to do, so I decided to reach out to my dad and seek his advice. He suggested that I work for a local dock installation company in our area. I started work that next week. Now, at my time here working for this docking company, I found myself carrying dock sections almost as tall as me, or putting on a wetsuit, diving into the water, finding sections that had sunken to the bottom of the lake. And what I realized, most importantly from this job, it wasn't how sore I was the first few weeks I showed up to work, but rather it was the impact that we were able to have and that I was able to have on the community. You see, the lakes in Okoboji in particular is a lot more than just a place to be on the water and be out in the sun. It's a place to make lifelong memories with friends and family. I'm not alone in having fond memories of sitting on an anchored down boat with the hot July sun beating down, sipping on a Gatorade, or eating Ritz crackers that became soggy from the lake water dripping from my hands. My dad trying to do a backflip off the boat, which he can still do every summer to prove that he's still got it. Or even me in elementary school, trying not to fall asleep as 4th of July fireworks lit up the night sky and boat radios blasting Born in the USA by Bruce Springsteen. But you see, this summer, with all this heavy flooding and unexpected rains, people had lost their docks and a whole lot of other things as well. But in losing their docks, not only did they lose that physical connection to the lake and to the water, they also lost that connection to the memories to be had, the memories that I had built and hope to continue to build someday, and maybe even share with future generations and kids. And in something as seemingly meaningless as fixing these docks, we were able to bring community members a sense of closure and control in this unpredictable time, whether that was reinstalling their dock or at least bringing it to the shoreline with hopes of future use in next seasons. And another really cool thing about working for this dock company is that one of my greatest role models, my grandpa, actually used to own the exact same company when he was not more than just a few years older than I am here today. And him being one of my biggest role models, he sadly this past spring passed away. And that was really tough to deal with. But if I were to try to encapsulate his entire life in one quote, it would be from one of my favorite childhood movies, Robots. See a need, fill a need. And as I was living life in his shoes, so to speak, every day working for this docking company, I realized how there was a need and we were filling it. And that was something that was really rewarding, even though I may not have realized it at the time. Now, speaking of time, as time works, the summer came and went, and I found myself coming back here to Iowa City for the start of my sophomore year of college. And very quickly, I became stressed and caught up in comparing myself to others. You see, the people I was surrounded with already had 1 to 2 to maybe even 3 internships, and they seemed to have their entire professional life planned out. I didn't have an internship yet, and I hardly had any professional experience to speak of on my resume. And I got caught up in this really toxic cycle, and so I decided to take a step back. And it was in taking this step back, I reflected on some of the role models I've had throughout my life. And I realized, what was it that they did that made me look up to them? And I found myself coming back to thinking about my grandpa. And I realized what I admired most about my grandpa, Paul Truesdell, was his ability to not only see the needs and fill it within the community, but also to have genuine interactions and to make you feel valuable and like you belonged. He was a very genuine person. Whether that was serving on the high school band board as his kids, my dad was growing up, or being Santa Claus for the local town, or even something as simple as just having a conversation. He made you feel valued, and he made you feel heard, and that was something I really admired and I looked up to. Thinking about this and thinking about my grandpa and what he used to do, I realized that through working with the docking business, I wasn't able to show up to work every day because it was a really fun job or really easy, because some days, let's be honest, it was neither. I was able to show up every day because I was motivated by the impact that we were having on the community and that need we were filling. I was motivated by the relationships I was able to form with my coworkers, of which I'd never met before the start of that summer, and now I continue to this day to even text and reach out to some of them. In finding this motivation and comparing that to getting just caught up in comparing myself to others, I realized that if that's what motivates me, that's what I should look for in the future. I should find those needs and I should try to fill them. And so while I might not know exactly what the future has in store, like my grandpa, Paul Truesdell, my role model, I can look for something. I can find a need and I can find a way to fill it.
That was Aiden Truesdell live at our Fall 2024 Story Lab Showcase in downtown Iowa City. You can watch the video of Aiden's story and other Tippie storytellers via the link in this week's show notes. Before we wrap up, let's go back to Martin Grace one last time for a final tip-e for you to remember in your work.
One of the, important things to think about is that managing your own personal risk. We've been just talking about insurance, and we've been talking about mostly homeowners and disaster risk. But thinking about your whole top to bottom activities, are you volunteering? Are you renting? Are you buying? All these things are risks to your household or to your family portfolio. So in addition to thinking about your investment portfolio, you should think about your risk portfolio. And every once in a while, think about, am I protected for the types of risks that I'm engaging in? And we've talked about homeowners, and almost everybody has home insurance. But even then, you can buy more protection. Like if you're like a Boy Scout leader or a Girl Scout leader or something, you can buy liability insurance through your homeowner's policy to protect you yourself. Or if you're a coach or something, there's other things that you can do. There's always liability out there. So you think of all the activities that you're engaged in, and think of yourself as the risk manager for those activities. And one of the things you might think about is having a financial planner who would not just tell you about your retirement or your investments, but about your risk portfolio. And independent insurance agents also undertake that same kind of role. Most of us, use a 1-800 number to buy our homeowners insurance, but you can get advice about the types of risk protection that you need from a lot of different places. And, maybe once or twice in your career, you should think about just getting a checkup. Do I have those kind of things covered?
As we've seen, natural disasters bring risk that can be far-reaching, impacting the insurance industry as a whole. These disasters can also bring risk to the supply chains delivering critical relief to those in need. How can we make sure these victims get what they need as soon as possible? And how can for-profit companies such as Walmart, who want to stock up on supplies like generators, and relief agencies like the Red Cross respond effectively and efficiently when disasters strike? In our next episode of Tippie Leads, we'll talk with Ann Campbell, an expert in supply chain and disaster logistics. This episode of Tippie Leads was written and produced by me, Nick Westergaard, and Steve Courtwright. Special thanks to Martin Grace and Aiden Truesdell for taking on the risk of sharing their story here. Tippie Leads is a production of the Tippie Leadership Collaborative. To learn more, go to tippie.uiowa.edu/Tippie Leads. If you liked this episode, share it with a friend or coworker, or better yet, subscribe to the show on Spotify, Apple Podcasts, or wherever you like to listen. And if you're feeling generous, consider leaving us a rating or review to help others find the show. This is Nick Westergaard signing off. On behalf of everyone at Tippie, thanks for listening, and go Hawks!